Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks tread water as Jay Powell says the US labour market has cooled considerably, but the Fed chair fails to offer timeline for rate cuts. NATO ramps up its air defence support for Ukraine as new assessments suggest the war is heading towards stalemate. And Volkswagen slowdown, the German auto giant cuts its margin outlook, blaming disappointing EV demand and the costs of a possible closure of its Audi plants in Belgium. Happy Wednesday. This is Bloomberg Daybreak Europe. European futures pointed to gains of 0.3%, with the context, of course, that you've had 6 consecutive days of gains for the US markets. The S&P and the Nasdaq back to fresh records, notching new records once again. It was the banks, it was semiconductors that lifted the Nasdaq to those new highs. Modest gains in the session, but again, in the context that we've seen this longest streak now since January. FTSE 100 futures pointed to gains of 23 points. European stocks futures, as I mentioned, looking to add 11 points. Of course, in terms of the US picture, we've been thinking about what Jay Powell's been saying. S&P futures then looking to build on the gains of yesterday, pointing higher by just 0.1%. Nasdaq futures also higher after that record of yesterday, looking to add 36 points. Let's flip the board and look cross-asset then. Jay Powell then mentioning the labour market, mentioning risks around the jobs market of the US, even if he failed to give that timeline. Markets still pricing in, by the way, a 70% chance or thereabouts of the first cut coming in September. That hasn't really adjusted much on the back of the testimony that, of course, continues in the US today from Jay Powell. The US 10-year, 4.29, euro dollar in and reflection in terms of the French politics as the socialists reach out to Macron's party, maybe for some kind of coalition. 108 on euro dollar, and we'll see how the French politics ties into that. Currently up 0.1%. Brent, $84 a barrel, 40, and gold posting gains just shy of 0.2% at 2,367. Let's cross over to Singapore. Avril Hong standing by for us. A check on the Asian markets with the data out of China in focus.
Absolutely, Tom. We're seeing that, I think, is the driver of sentiment on the mainland benchmark. CSI 300 is pretty flat after the China CPI came in lower than expected, just highlighting how those deflationary pressures persist in Asia's largest economy, potentially also leading to further expectations of a rate cut from the PBOC come September, when the Federal Reserve could also move. And this is against the backdrop of going into next week, where there's going to be a big meeting with the top leaders of China, and not much is expected in the way of stimulus from that third plenum. So this is what you're seeing in the mainland movement, but elsewhere in the region, given how Powell maybe sounding somewhat dovish, given how he flagged the risk to the labour market, but not really giving anything in terms of timeline, it's pretty flat among equities elsewhere. The China bond markets continue taking higher. Let's flip the board because there are a couple of things I wanted to highlight as well. We had a recent survey by Bloomberg from traders and analysts, flip the board if we can, and the line in the sand for them is on the 10-year yield, if it hits 2.25%, on the 30-year yield 2.45%. If we see it going below that or hitting that level, that's when the PBOC might act to kind of sell bonds and stem the rally. Let's flip the board again, because we're not just keeping an eye on the PBOC, it's also about the RBNZ today sounding dovish, and we got the Kiwi really dropping, losing ground, worst performing currency in the Asia Pacific. Also wanted to highlight what we're seeing in the Japanese currency. Don't forget, this week is when the consultations with the BOJ with the institutional investors are underway to kind of suss out what they feel about the plan to reduce bond purchases. So far, it sounds like they've been asking for pretty hefty reductions, but I think there's also a bit of a muted reaction to what Powell said overnight. Tom.
Yeah, and of course what Powell's been talking about, of course, overshadows too much what is happening in the Asian markets, particularly in terms of the lines in the sand that you outlined for us in terms of the bond yields in China. And of course, if the Fed goes, maybe that gives the PBOC some breathing room. Avril Hong, thank you very much indeed in Singapore, giving us a check of the Asian markets. Let's get more details then on what we've been hearing from the Fed chair. Jay Powell has been careful, of course, not to offer a timeline for rate cuts in comments to US lawmakers yesterday. But he says labour market conditions have now cooled considerably.
The most recent inflation readings, however, have shown some modest further progress. and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation.
OK, let's bring in Jill Desis at this point, who's been monitoring all of that for us. Jill, let's get straight to it then. Given what we heard from Jay Powell, how likely does a September cut by the Fed now look?
Well, Tom, I mean, look, yes, he avoided, pinning down a specific date for when that interest rate may come, but he certainly did talk about the cooling labor market quite a bit there. I think by our count, it was something like 5 times that the subject came up in the context of his remarks. So when you're looking at the full picture here, it does seem like, yes, maybe the Fed is actually considering that September timeline for that interest rate cut. We've had, 3 consecutive months of, these rising unemployment rates, that idea that the labor market is continuing to cool. We still have, I think, about 3 inflation prints before we actually get into September. So time is on the Fed's side. If, Jay Powell is sitting here saying we need to see more data to actually make them more comfortable with that, I think it's very likely that the Fed may actually feel comfortable with that timeline if the data continues to follow this trend that we've been seeing.
Yeah, and we'll look to see what the CPI on Thursday, of course, tomorrow out of the US does in terms of underscoring that, or at least building on that picture, with core expected to come in month on month at around 0.2%. You would have thought that would align with expectations for September. We'll see what the data indeed comes through at. In terms of what we've been hearing from the US Treasury Secretary then, Jill, also giving testimony, what do we hear from Janet Yellen?
Yes, Janet Yellen just seemed to kind of reinforce some of those Powell comments. We heard a lot of similar sentiment from her about how the labor market is no longer driving inflation to the extent that we saw earlier in the pandemic recovery. So it does seem like from Janet Yellen, obviously Treasury Secretary, but remember, former Fed chair as well. She really, really understands a lot of these economic issues very, very well. She's really kind of playing along those same lines there. So I think you're hearing a lot of these, really important voices within the world of economics that, they are all seeing this trend toward this cooling labor market. And so I think that really does put us in a very different position than we were even just a few months ago, Tom.
OK, Jill Desis, thank you very much indeed in terms of the details coming through. With that testimony, of course, from Jay Powell and the Treasury Secretary, which continues for Jay Powell today. Jill, thank you. To the geopolitics now. NATO opening its summit in Washington by promising 5 long-range air defence systems for Ukraine. The fresh show of support comes even as the alliance resists offering Kyiv a clear path towards membership.
The United States will make sure that when we export critical air defense interceptors, Ukraine goes to the front of the line. They will get this assistance before anyone else gets it. All told, Ukraine will receive hundreds of additional interceptors over the next year, helping protect Ukrainian cities against Russian missiles.
Right, for more on this, let's bring in Bloomberg's Kriti Gupta of the Opening Trade, of course, anchor on that show. Kriti, you've been following this for us. In terms of the support then for Ukraine coming through from NATO, how consequential is it? What is new? What is being repeated? What is the depth of support right now from NATO for Ukraine?
So the 5 long-range missile systems are very significant. And the reason here is because when we were going into the NATO summit, the added defense wasn't telegraphed. It was something that, of course, Ukraine was pushing for and Vladimir Zelensky was pushing for, but it wasn't something that was guaranteed or really getting the kind of endorsement you heard from Joe Biden prior to this NATO summit. What's important here as well is the types of defense systems that they're talking about. Of course, they've been on the hunt for those Patriot missiles, Patriot systems for a very long time. So 4 out of the 5 are those kind of systems. But the key here is that they are long-range missile systems. So the question here is not just defending against any attacks from Russia. And remember, in the last 48 hours as well, you also had that deadly attack on the children's hospital as well in Kyiv. So this follows the reaction or the international fallout to that as well. What's also significant is that now with these long-range missiles, Ukraine, with some countries' defense capabilities, has the ability to basically have a bigger offensive and actually have these missiles go into Russia as opposed to only have a defensive positioning.
Yeah, and of course there are caveats around to what extent they can use those in Russian territory. But that attack, as you say, leaving, I believe, at least 40 dead, that attack, that Russian attack on a children's hospital, really just underscoring the need for these defence systems. Meanwhile, Putin, who of course is ultimately responsible for those kind of attacks, has been meeting with leaders from all over the world and seems to be a little less isolated than he once was.
Viktor Orban, Narendra Modi, among many others, Xi Jinping as well, and not to mention his very vocal and very kind of almost parade-like meeting with Kim Jong-un over in North Korea as well. So you do see a lot of meetings in terms of kind of creating this axis of against NATO or axis even against specifically the United States. What that does to actually change the way that China operates, et cetera, hasn't really shown up yet outside of really pushing all of these various players saying we're on a peace initiative, we're looking for peace in Ukraine, because they're still trying not to alienate the United States and Western allies. Well, I think Turkey is a fabulous example of that, of doing just that, where they're trying to skirt the line of being a NATO member, but also working with China, being in that Shanghai Cooperation Organization, but also potentially having a dialogue open with Russia. So you are going to see more and more of this, but it is concerning and has been a subject of concern at the NATO summit that Vladimir Putin, isolated for 2 years and counting, is now able to have these meetings.
Yeah, that Turkey dynamic is really fascinating, given, as you say, it's NATO membership, and interesting to see that picture of Modi giving literally a hug to Putin and the focus for India on weapons and Russian oil. Right, Kriti Gupta, thank you very much indeed in terms of the latest on that NATO summit. Here's what else we'll be thinking about then today. 2:30 p.m. UK time. The BOE's Hugh Pill, the chief economist, will be speaking. There seems to be some consensus forming, at least getting to some kind of consensus, maybe moving towards a consensus that maybe August is in the cards for the BOE in terms of its first rate cut. So really interesting to hear from Hugh Pill later today. Meanwhile, 3 p.m. UK time, you're going to get further testimony from the Fed's chair, of course, Jay Powell, after what we heard yesterday. We'll see if he does get pushed on that time frame for rate cuts in a more kind of substantial way. At 6 p.m, meanwhile, UK time, there is a US 10-year bond auction. That's after an auction that came through yesterday, was well received by the markets. We'll see if that holds up later today with that 10-year bond auction in the US. Coming up, Volkswagen hitting the brakes. We take a look at why the German car giant is cutting its margin guidance. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. A redhead crossing the terminal right now. This is reporting from the Financial Times that Microsoft has given up its observer seat on OpenAI's board, of course, the company behind ChatGPT. So Microsoft giving up its observer seat on the board. This, of course, is a company. Microsoft invested about $13 billion in OpenAI, a company most recently valued at about $80 billion. The Financial Times reporting that this is probably down to regulatory scrutiny, of this tie-up between Microsoft and OpenAI. So they are giving up this board role effective immediately, is the quote from the Financial Times. Apple had also been expected to take an observer role. That is now not going to happen. So it seems the regulatory scrutiny is leading to these shifts. We'll keep across this story and bring you more as and when we get it. To another corporate story right now. Volkswagen has cut its full-year margin forecast after warning that it may close its Brussels plant as low EV demand hits its Audi division. Bloomberg's aviation and transportation reporter Danny Lee has been following the story for us and brings us the details. Danny, what does this mean then for VW?
Yeah, so it's cutting its margin outlook for the year to 7%, and that's down from as much as 7.5%. And what's interesting is the amount of extra additional costs that is baking into this announcement, an extra 2.6 billion euro overall. They don't specify specifically what these extra costs are, but clearly it's never good for a company which is adding additional costs into its picture. But of course, the backdrop is battery electric vehicle sales in Europe, which is sales are weak, demand is poor, and for Volkswagen and other brands such as Mercedes-Benz, trying to go through this EV transition in Europe, they're well behind the likes of China, who are setting up stall on the block in the continent. And so as these brands, these European brands, try to transition, there clearly is a bit of a struggle in matching supply and demand. And as this announcement was made, the likes of Audi as well with its Belgian plant that might close as well. There's no new models currently projected to be made. So it's a tough set of circumstances when you look at what automakers are trying to do to balance the production picture. And for Bloomberg Intelligence, they kind of indicated that the likes of VW, this backdrop gives them a pathway to potentially write down some of its BEV assets, as is the same kind of picture we are seeing across Europe.
Okay, yeah, as you say, underscoring the challenges around this shift to EVs from some of these automakers. How is it likely then to affect their announcement in terms of the setup for VW in its earnings picture for the second quarter, Danny?
Yeah, we're going to see Volkswagen produce its first half earnings on August 1st. And I took a look in the terminal just to see what its operating profit performance looks like. And it's holding steady around 5.8 billion euros at the moment. But that has come down a little bit from an earlier high. But after the first quarter, when the weak sales performance saw it cut its profit performance by 20%, it would clearly hope to avoid another cut in that. But Volkswagen still pushing ahead with investments in the likes of EVs after the investment, the $5 billion US investment in Rivian in the US. They've still got investments as well in China. So it still seems fully throated into this EV transition, but it's going to take a little bit longer.
OK, Bloomberg's aviation transportation reporter Danny Lee, thank you very much indeed for breaking down the details when it comes to the latest from VW. Switching focus to Boeing right now, the aircraft maker, of course, just delivering some good news for once. It's not often you get to say that about Boeing. The troubled US plane maker handed over 44 commercial aircraft last month. That is the most since the 737 MAX blowout in January. Our global aviation editorial leader Benny Kamel joins us with the details. Benny, you brought us Airbus yesterday. Now we focus on the Boeing numbers. How do they stack up then against their European rival?
Yeah, good morning. You're right that it's not that often that we get to say good news and Boeing in the same sentence. But this is actually a fairly good set of numbers from them. You broke them down. 44 aircraft altogether, 35, of the 737. That's obviously, on the one hand, the most crucial aircraft, but also the one that was involved in this January mishap that set off this whole chain reaction of events since. The other thing that you have to look at, and we saw it on the screen just now, if you stack that up against Airbus, they're obviously still quite a bit behind. Airbus came out with their numbers on Monday, and they look better still. But for both companies, it's looking a little better heading into the latter part of the year. The first half was obviously, with Boeing, marked by the fallout from that January 5th mishap. And for Airbus, it was also a difficult first half. They had considerable supply chain issues. And those were visible in the numbers. We saw the profit warning there about a week ago. So there's a lot of hope that the second half will bring a sense of relief for both plane makers.
Benny, where are we then in terms of the road to recovery for Boeing?
Yeah, so the big building block that remains for them is who will take over the company. We know that Dave Calhoun has said he wants to leave by the end of the year. So they have about 6 months to figure this out. And there's no real clear leader who's emerged as a successor. So that's one thing that we'll keep a close eye on. The next big sort of check-in with Boeing and with the aviation industry writ large will be in about 10 days, where everyone meets at the Farnborough Air Show south of London. Boeing will be there. A lot of executives will be there. We'll be taking the temperature of sort of the order activity, what's the appetite out there, and crucially, what's the supply chain issue looking like? And that is the big bottleneck at this point for the industry at large. So can they get over that? Can they actually fulfill all these orders that they've managed to accumulate over the last couple of years? Execution really is the big question for Boeing and for Airbus, and for Boeing in particular, who will oversee that execution?
OK, really interesting in terms of who we're looking for in terms of taking over that company and the need to execute around those supply chain challenges. Benny Kamel, thank you very much indeed in terms of the latest on Boeing and the challenges ahead. Thank you very much for the update. Coming up, Moody's cuts Kenya's credit deeper into junk. That's after deadly protests forced the government to scrap a new tax plan. We'll have the details then on that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Moody's has cut Kenya's credit rating deeper into junk. That's after deadly protests forced the government to scrap a plan to raise more than $2 billion in new taxes. The cut sees Kenya drop one level to CAA1 at Moody's, with its negative outlook maintained. For more on this, let's bring in Bloomberg's Eric Ombok, who joins us from Nairobi for the details, the implications as well, of course, for the economy of Kenya. Eric, what will the downgrade and the increased borrowing costs then mean for Ruto, of course, the leader over in Kenya, mean for that government going forward?
Thank you, Tom. Yes, as you've rightly mentioned, one of the key consequences of the ratings downgrade is increased borrowing for Kenya's government. That's because the country is considered a riskier borrower, and therefore bondholders for both domestic and external government debt will seek a premium on the lending rates. Already we saw the yields on the yields to maturity for Kenya's dollar bonds that will mature in 2031, 2032, and 2048, rising by a few basis points each yesterday. Then locally, we have treasury bills auctions every Thursday and treasury bonds auction at least once every month. We've been seeing week on week for the treasury bills. We've been seeing the yield curve rising, and so that is likely to continue. There'll also be increased borrowing because the government has had to cut about 177 billion shillings. That's equivalent to $1.28 billion out of the original budget that it had. So that the balance will be raised through additional borrowing. So there'll be pressure to borrow more, and that will also put pressure on interest rates.
OK, so more borrowing and a cut there to the budget, as you say, of around 1.2 or 1.3 billion US dollars equivalent. What does it mean more broadly then for the government's spending plans in the months and years ahead?
One of those things will be, for instance, the president announced on Friday that any civil servant who's reached the official retirement age of 60 will have to leave work immediately. There was a position known as chief administrative secretaries who are to be hired, so that has been stopped until further notice. We'll also be seeing a lot of budget cuts for several ministries and government departments. So that's going to affect a lot of key projects. He also did announce that about 47 state-owned enterprises will be dissolved as a result of those budget cuts.
OK, Bloomberg's Eric Ombok in Nairobi on the downgrade and the implications for the finances and the politics of that country. Eric, thank you very much indeed for the update. Just briefly getting you up to speed in terms of the inflation data out of China, because it is a reminder of the challenges in the world's second largest economy as well. In terms of the consumer price index, essentially back and around zero, so below the estimates in terms of the CPI. Producer prices as well, factory gate prices remain significantly in deflation, following 0.8%. Really speaks to the challenges then and the need, money would argue, for the government of China to stimulate more. But they can't really do that, arguably, until the Fed lowers rates. So again, what's happening in China linking to what's happening with the Fed. And you can see the pressure there in terms of stocks today. The CSI 300, the benchmark in mainland China, down 0.2%. The yuan at 7.29, and the 10-year yield currently at 2.26 on the Chinese benchmark 10-year. We've seen a lot of money moving into Chinese bonds. Coming up, Joe Biden hosts the NATO summit in Washington as questions over his candidacy, of course, continue to loom. We're going to have more on the US president's week of reckoning. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. European futures point higher after US stocks notch another record. Fed Chair Jerome Powell warns of labour market risks, but avoids giving a timeline for rate cuts during testimony to US lawmakers. NATO ramps up its air defence support for Ukraine as new assessments suggest the war is heading towards stalemates. And Volkswagen's slowdown. The German auto giant cuts its margin outlook, blaming disappointing EV demand and the costs of a possible closure of its Audi plants in Belgium. European futures then after the losses of yesterday pointing to modest gains around 0.2%. We'll of course be watching Volkswagen at the open 8 a.m. UK time. FTSE 100 futures looking to gain 17 points. European futures, as I said, in positive territory again after the losses of Tuesday. S&P futures looking to build on that additional record, 6 straight days of gains now for US stocks. That's the longest winning streak since January. Currently, very modest gains coming through from S&P futures. Nasdaq futures pointing to upside of around 27 points again after the Nasdaq also hit a fresh record yesterday. Let's have a look quickly cross asset. We keep an eye on euro dollar and of course what is unfolding in France. The negotiations continue at a rather glacial pace, it has to be said. Euro dollar at 108. The US 10-year then 429. Jay Powell will be continuing that testimony later today. Again, really emphasising the cooling that he's seeing in the labour market without committing to a September cut. Brent, $84 a barrel on Brent, down 0.3%. And gold seeing a bit of a lift so far in the session, up 0.2%. Some breaking news coming through from the global foundry, really, when it comes to semiconductors, particularly at the high end. TSMC over in Taiwan coming through with its sales data for June, currently looking at 207, close to 208 billion Taiwanese dollars in terms of the sales number for June for TSMC. This is the contract manufacturer for the likes of Nvidia, its GPUs, and Apple, of course. This is a stock that is up, by the way, about 80% year to date and briefly crossed the $1 trillion mark in terms of market cap. And again, the sales data, 207 trillion Taiwanese dollars. We'll get more context on that with you right now and bring in Bloomberg's Annabelle Drewlers, who's been monitoring this story for us, and the Samsung strikes as well. But we'll start with TSMC. Annabelle, how do these numbers tie in to the second quarter earnings next week for TSMC, do you think?
Yeah, well, Tom, it tells us that actually the second quarter average is likely to beat that estimate when the numbers come in next week. So there's a little bit of a quirk about Taiwanese listed companies. They actually need to release their monthly sales figures. Given that, this June reading, we can then extrapolate based on the numbers that we had for May, April and June. How does that feed into the estimates that we see for the second quarter figures total going into next week? So the expectation is that we're going to see around 652 billion Taiwanese dollars of sales for the second quarter period. This figure here, though, of 207 or $208 billion tells us we're likely to exceed that when you take into account the numbers we've had for May and April so far. So the revenue guidance or the expectations is we're going to see revenue growth of around 35% on the year. That tells us we're likely to exceed that with the release next week. And also, of course, really important to note what we get in terms of the revenue outlook moving forward, any CapEx plans as well. But as you said, TSMC is a company that has really been on a tear over the course of 2024, given it is that sole supplier to the likes of Nvidia, Apple, the most advanced chips that we see in the AI space.
Yeah, an important summary there in terms of the details coming through from TSMC, Annabelle. And you've been monitoring as well the strikes in South Korea at Samsung. I mean, the question, of course, raises as to what this means for supply chains globally in terms of the memory chips that are produced by Samsung. What is the update in terms of these strikes?
Yeah, well, it's interesting you said that because actually when the news broke this morning, we didn't see too much of a reaction coming through in Samsung's share price. But where you did see the bigger weakness was actually with the suppliers. So perhaps points to that what you were just saying there about that broader ramifications at play. What has happened, though, is essentially Samsung's biggest labour union, it issued or started a strike on Monday of this week. It was supposed to conclude today, but a few hours ago we got a statement from the union saying that Samsung's management was not prepared to engage with them on their demands, and so they're now calling for this indefinite strike, which is something they actually had foreshadowed they would be open to proceeding with. What this all relates to is Samsung workers that essentially want not only more transparency around how their bonuses are calculated. They want greater assurances that they will be delivered, plus higher pay, a little bit of extra leave as well. They're just some of the requests, but Samsung for now is saying it hasn't impacted chip production. That was pre this indefinite strike being issued, though. So very much a live story, and we'll see really how far this extends for. Samsung's union is saying management will be forced to meet them at that negotiation table.
OK, Annabelle Drewlers, thank you very much indeed with the update on Samsung, the strike there, and of course the numbers crossing from TSMC. RMC. Now to the geopolitics and the NATO summit. We'll go back there in Washington, of course, convening under a cloud of questions, obviously, over President Joe Biden and his future. Biden railing against Democrats, calling for him to step aside and challenging opponents to step forward and try to unseat him. Let's bring in then Bloomberg's Kriti Gupta. We knew that the lens, Kriti, was going to be on the president, not just around the commitments for Ukraine, but also around his performance at this summit that continues. And some of the headlines this morning, whether it's the New York Times or the BBC, talking about the strength in terms of his performance when he stepped up. He was reading from a teleprompter, so there is that. But there was energy, there was vigour there. To what extent is the story evolving around the pressure on Biden at this point?
Well, he's really under a lot of pressure to perform and to really live up to those expectations that he can not only win this election, but he can actually execute those next 4 years in office. I think what's crucial is how much of the kind of calls for him to quit are kind of subsiding a little bit. And let me kind of temper this a little bit, because you are definitely seeing pressure on him to step aside and to pick someone else. Some people saying it should be Kamala Harris, others putting their weight behind Gavin Newsom. The latest voice as a part of this whole thing is J.B. Pritzker, who was the Illinois governor. He was also seen as a potential candidate to replace him. He's also a billionaire and an heir to the Hyatt fortunes, for example. So there are a lot of people who are still rallying around President Biden, saying he is fully capable of the job, including the folks that are potentially on the docket to replace him if he were to step down. That being said, it's important to talk about who is actually supporting this as opposed to how many people are supporting this. So, for example, no major Senate Democrat has actually been vocal about saying he should step down. If you were to hear this hypothetically from a Chuck Schumer, for example, or a Hakeem Jeffries, which is basically your majority and minority whips in the Senate, that would be a bigger kind of move to actually have him removed. But right now, you're only seeing a handful of legislators. Yes, the numbers are growing, but they're not going to be the senior members of the party. OK, and it's interesting in terms of how you break it down between the House and the Senate with the 2-year versus 4-year, and to what extent that's maybe a dynamic as well. So we watch to see whether any senators break on this. It seems a lot of lawmakers in the US are kind of giving themselves optionality as well. What are you going to be watching for going forward in terms of how this moves? So the clock is ticking. DNC Platform Committee, which is kind of the leadership of the actual convention itself. The convention isn't until August. There's a virtual roll call where they basically have to lock in the presumptive nominee to make an Ohio ballot deadline. That's a lot of nitty gritty for saying to get to that virtual roll call. The DNC Platform Committee officially meets on July 11th. So that is this Friday. And basically, they're going to be having that discussion of whether or not President Biden represents the interests of the party. But remember, there are rules at play here. 99% of the 4,000 delegates that Biden has already won in the previous election are by DNC rules already pledged to him. It's why at the end of the day, you can have as much pressure as you want. This is President Biden's call at the end of the day. Yeah, the clock is ticking, though, as you outlined for us, as we look ahead to Friday and then August. August is just around the corner, isn't it? It's going to come quickly. Kriti Gupta, thank you very much indeed of the opening trade in terms of the details and the latest on Biden, of course, that NATO summit. Talking of the NATO summit, we have more coming through in terms of the UK stance, because as the NATO gathering gets underway, the UK Prime Minister Keir Starmer says he will publish a roadmap showing how this country will ramp up defence spending to 2.5% of GDP. The new government is facing calls from the British military and allies abroad to clarify its position and its policy. Starmer has previously committed to achieving the spending goal, quote, as soon as the public finances allow, without giving details on timings. Switching focus now, and French football team FC Girondins de Bordeaux is in discussions with the American owner of Liverpool about a possible takeover. Bordeaux says it's considering a possible proposal to sell a majority stake of its capital to Fenway Sports Group, the owner of the UK club. The 6-time French champions have been struggling financially and risk being penalised by the French football regulator without new funding. And in technology, Oracle shares fell after Elon Musk said his AI startup would rely less on the company's cloud technology. Posting on X, Musk said his firm will build a system to train AI models internally. Tech publication The Information earlier reported the company's ending talks on a potential $10 billion cloud deal that would have seen xAI renting cloud servers from Oracle. And now the jurors in Bill Huang's market manipulation trial over the collapse of Archegos Capital Management have started deliberations. Bloomberg's Charlie Wells joins us now with the details. Charlie, there's so much scrutiny, so much focus on how and when this all kind of came tearing down around Bill Huang's ears. But of course, the question as to whether he's culpable or not remains and now is in the hands of the jury. Where do we stand on this?
Well, look, I mean, these are 12 New Yorkers. They have to go through 7 weeks of evidence. This was very intensive scrutiny of this company. This was very kind of inside baseball. And these jurors, none of them necessarily had that kind of sophisticated financial knowledge. So, the judge over the course of those 7 weeks was really pushing both the defense and the prosecution to speak in ways that they could understand. Now, they're tasked with determining whether Archegos and Bill Wang engaged in market manipulation, in securities and wire fraud and conspiracy, or whether, as the defense tried to make the point over these past 7 weeks, this was just a sort of ordinary type of trading, risky, but legal.
Yeah, a 90-year-old judge, I believe, saying this is 101 in finance. You're going to have to get it up to speed on this to the jury. But as you say, giving some tongue lashing to some members presenting their evidence in terms of making sure it's clear and transparent. What happens if he gets convicted? It's still an if, of course. And what would that mean for Bill Hong? What are potential sentences he could face?
Huge if. In theory, he could. The stakes are very high. He could face over 200 years in prison.
Wow.
This is white collar, though, and in white collar sentencing, often, if convicted, those sentences can be served concurrently. So if you want to put this in context and look back at another huge fraud trial from earlier this year, Sam Bankman-Fried, he faced a maximum sentence of over 100 years. He ended up getting 25. So that just kind of puts this into the context there of, yes, huge potential prison time, but in white collar works a little bit differently.
OK, Charlie Wells with the latest. Of course, we wait for that decision from the jury then on the Bill Hwang and Archegos case. Charlie, with the details, thank you very much indeed. Coming up, the Fed President Jerome Powell. We keep an eye on the French President as well. Flagging rising risks to jobs, Jay Powell, but avoids the rate cut timing question. We're going to unpack his comments in more detail and their market impact. That is next. This is Bloomberg.
Inflation has eased notably over the past couple of years. More good data would strengthen our confidence that inflation is moving sustainably toward 2%. The labor market appears to be fully back in balance. Labor market conditions have cooled considerably compared to where they were 2 years ago. We're well aware that we now face two-sided risks. If we loosen policy too late or too little, we could hurt economic activity. If we loosen policy too much or too soon, then we could undermine the progress on inflation. We continue to make decisions meeting by meeting. And the likely direction does seem to be as we make more progress in inflation and as the labor market remains strong, we begin to loosen policy at the right moment.
Fed Chair Jerome Powell, of course, testifying before a Senate committee yesterday. Let's bring in at this point Janet Murray, head of market analysis at RBC Brewin Dolphin. Janet, as you listened in to the Fed chair speaking yesterday, and he continues that testimony later today, is it your view that this is a Fed chair leaning towards a cut in September?
Hi, Tom. Good morning. Thanks for having me. Yes, I think it has been for a while, this case that the Fed chair is leaning towards rate cut. I think we get more evidence of that because he basically said the labor market is in much better balance now. And I think the Fed's focus is not just purely on inflation, but shifting more and more to the growth side of things. And I think he's right. I think if he leave rate cut too late, I think that could do some damage to the economy. If you look at the latest job data, right? Job gains is okay, but the unemployment rate pick up, obviously. And I think one indicator that is the temporary services help, it has been in decline and actually quite notably in June. So I think it is really worth, starting to worry a little bit about the state of the labor market.
Janet, if then the compulsion for cutting in September, or whenever they first cut, is weakness in the labour market versus a downtrend in inflation, if that's the rationale, if that's what's compelling them to cut, is that still supportive for stocks?
Yeah, that's the thing. I think right now we still have that Goldilocks scenario, which is great for markets. And our base case is still a soft landing. But as I said, if the Fed leave it too late, then potentially we can see further weakness later this year. So far, if you look at the U.S. economic surprises, it has actually been going down and negative, contrary to some other major economies. So I I think that's why the case is building for rate cut. I think we're fine for now, but if we see further weakness going into the fourth quarter, then I think that could be a bit more market concern.
Janet, I want to get your views on the UK, but before we go there, one more on the US and the politics of the US. We get reminded of that in terms of the scrutiny of Joe Biden. We lead up to the elections, of course, in November. Is there a complacency in these markets about the political risks in the US with a potential inflationary input coming through from any Trump presidency, if, of course, he gets that presidency?
Yeah, I think there is not just complacency in the political side. I think in general, the market is exhibiting quite a bit of complacency. I think, in general, the economic backdrop is okay. As I said, not too hot, not too cold. Inflation is coming down. But if you look at where the market is trading, I mean, the VIX is trading near a post-COVID low, and the technicals are really at overbought territory. So I would say, in general, indeed, that there is a complacency. And on the political side, I think, I think ultimately, if Trump were to get into power, it will be inflationary. I think that's the most obvious conclusion. I think if we get a Congress setup that is Democratic and Trump as president, I think that would be the worst scenario for markets, because you don't get the tax cuts, but you get potentially all the trade wars going on.
OK, that's interesting in terms of the combination and what that would mean for the markets. To the UK then, Janet, and we're looking, the FTSE 100 is up, 5.5% year to date. It's still below the gains that come through from Europe, certainly from the US, but we have a more stable political system, or at least political outcome here, at least for now. Can UK equities take a leadership role, do you think, in the months ahead?
So we still think the US is likely to outperform because I think the current macro setup is more pro-growth, especially growth quality. But we actually upgraded UK in the most recent month because I think the political stability definitely helps. If you look at where the FTSE 250 is trading, is actually badly outperformed the FTSE 100. So I think it helps. But I think for the UK, first of all, the valuation is really undemanding. And I think it is actually a good diversifier if you're bullish on the US, because that's very growthy, and you actually want some value style to balance that a little bit. And the UK is actually, quite defensive, and also it gives you a hedge to inflation risk, right? Because you got these commodities and miners. So we think actually, it is a cheap way to hedge against inflation and to hedge against other growthy areas of your portfolio.
OK, so it's maybe a hedge, as you say, to that US exposure. And talking about US exposure, you mentioned that you're overweight in the US still. With that caution that you add around that, where does that take you exactly within the US equity space? Citigroup coming out saying it's time to take profit on some of those AI winners, some of those semiconductor winners, and spread your bets a bit more widely. Do you kind of agree with that view? Where do you land on that?
We have a positive view on the semiconductor sector actually for quite a while. We are not taking that positive view yet because I think a lot of the focus is on the AI, the tailwind on semiconductor stocks. But in our view, according to our analysts, we track the semiconductor cycle, and we're still in an uptrend. We're still in the middle of the uptrend. So we don't think it is time yet for us to take that positive view away, and let alone, the benefits of AI is still in the early innings. I think unless you see that AI theme maturing, I don't think we should start to take away that positive view on semiconductor. But obviously, as I mentioned, I understand the technicals are quite stretched, so that could be a pullback. But at the same time, I think it may be a good time to add to these positions when markets have a pullback.
OK, so maybe buy the dip if there is a pullback, a significant pullback in the US. We're not seeing that yet, of course. 6 straight days of gains for the S&P. Janet Murray, Head of Market Analysis at RBC Brewin Dolphin. Thank you very much indeed on how to position in these markets. There's plenty more coming up. Stay with us. This is Bloomberg.
Although the labor market was initially very tight, now we have a strong labor market, but one with fewer pressures that would create inflationary concern.
The US Treasury Secretary, of course, Janet Yellen, giving testimony to Congress yesterday, alongside, of course, Jay Powell. He spoke and will continue to give testimony later today. And Jay Powell really emphasised, he repeated this multiple times, around the labour market cooling and the potential risks there. Look, he did not commit to a September cut from the Fed. He didn't give a time frame, but he did lean in to the take that there is now softness coming through from this labour market. The unemployment rate of 4.1%, inflation coming down as well. So you're seeing softness in the labour market, softness in inflation. We'll get to see if that inflation and disinflation narrative, at least trend, continues. That data coming through out of the US on Thursday will be really important as well, with some views in terms of the volatility, the market volatility around that print. That's Thursday. But this is the broader picture then in terms of the slowing inflation and the softening of the labour market, and in terms of how you think about where the Fed goes next. Bloomberg Economics, by the way, thinks that unemployment will go from 4.1% now to 4.5% in the fourth quarter, and they say that is when the balance of risks for the Fed will shift firmly towards the labour market. If it hasn't already, let's flip the board and have a look at the next board we're looking at, because, of course, you've got another record for the S&P 500. This is 6 consecutive gains now in a row. It's the longest winning track we've had for the S&P since January. The gains coming through, but there's the context as well in terms of this breadth story or lack of breadth story, because it's really a little less than half of these stocks within the S&P 500 have been doing the heavy lifting on expectations, of course, that the earnings growth will come through from some of those mega cap chip and tech names. Is this a cautionary signal for you, the lack of breadth in this market? Just a reminder in terms of the gains coming through past 60 days, all under 250 members within that mix. Let's flip the ball and quickly look at the inflation story in China, or lack of inflation, because factory gate prices contracted. They fell 0.8%. That's a really challenging point then for the factory gate story, or at least the producer prices in China. CPI as well, for a 5th straight month, coming in basically around zero. It's just showing the lack of consumer optimism in that market. So they need to act, policymakers in China, would be the take from many, but they are constrained by the Fed, so they will be looking at the Fed as well. If a cut comes through from the Fed, that could give some breathing room to the policymakers of China. Coming up, we are going to be speaking to the former Italian Prime Minister Matteo Renzi about the politics of Europe. That is at 8:45 UK time on the opening trade. Stay with us. This is Bloomberg.